we've seen the euro come back. Yesterday we were looking for a move. Well, not on yesterday, but yesterday I was calling for a move towards, in the 1020s, which is exactly where the euro went to, but I didn't expect it to get there yesterday. I was thinking over the course of the next couple of days or so, 3 days. That is trading days. But we did get a surprise move lower, but we've turned around and we've come back rather smartly. And with that nice turnaround, you would expect them to be able to push prices a little bit higher. We're coming into the 3-day weekend, so anybody that got short and stayed short is, probably in a little bit of a tough way. So they may want to push them up a little bit higher. We've also seen gold on the backdrop of the potential summer stimulus that Connie was talking about, give a little bit of an extra boost, and we were able to kick through that 1330 we were talking about. We ran out of gas just before that 1342 area, and we'll take a look at that. Obviously, the cable took a whack lower. We talked about that yesterday, how it went into that zone we were looking at between 34.84 and I think it's 35.80 or something like that. But anyway, it came up just a couple of pips short of the 50%, and awesome area to shorted it against. We've had from that area fallen nearly 350 pips. We'd actually fallen a quick 200 almost, about 175 before we got a rally back into the zone of 34.84. And then, of course, when Connie gave that information, we ultimately ended up taking a move lower. And we had some, headlines that continue to come across the wires here regarding Osborne, also conservative leadership, just one after the other. I don't think it's necessarily making that big of an impact. It's certainly cable's not moving that much off of these headlines. They just continue to drip in. And we've had headlines coming from EC Brewers Kerr as well as Pratt, talking about potential for QE or lack of QE and the concerns over the Brexit and how things are going to go on and play out over that course. Also, we've had the 10-year treasuries go to another low. So, like I said, we had some big moves overnight. You have to be a little bit cautious as we come into a 3-day weekend. Trading is going to be light. There might be some scalping opportunities, but not really a whole lot. I mean, we did see crude get whacked a little bit. Someone asked me about that yesterday in one of the chat rooms, and I was telling them that 49.50 continues to remain a very key area. We actually faded from that 49.50. We've worked lower. And now, I mean, overall, I'm looking for lower prices in crude. My whole thinking was, as I said, even though the market did what it wanted to do, we even saw a move up for almost to $50, is that the whole Brexit thing has a concern for the overall global economy. Although, like I've been saying for a long time, everything's A-OK in the USA. I don't care about the rest of the globe. I don't care what all these naysayers say. Everything's A-OK in the USA. And if you doubt that, just take a look at the S&Ps. I can't even believe the way they came back. I even tried to take a whack at them on the short side, and ended up getting, knocked right out of that. Like I said, everything's A-OK in the USA. You keep looking at it that way, you're going to be A-OK. Those people that were looking for moves to 1940 and 1920, they're long gone and in the dust and broken on the trading heap. Like I said, if you keep trying to sell short the USA, you're going to get run over every time without an exception. So, I mean, we've seen that continuously. From the Chinese debacle to one thing after another, it doesn't make any difference. They're buying these SPUs. And I've said it before, the reason is there's no viable means of retirement here in the U.S. So when we go from 10.2% unemployment at the height of the 2008 crisis all the way down to sub 5% just on last month's, that's more people being put to work. That's less people drain on the government coffers. That's more people putting money in. And there's no viable means of retirement other than the 401k put. So that phrase that I coined which I call the 401k put. You've heard of the Bernanke put. I call this now the 401k put. It's going to be bought on dips. As long as we got unemployment continue to move lower, it's going to be bought on dips. So that's the 401k put. So we'll go and take a look at what's happened overall in FX news. See, the yen has strengthened a little bit. I mean, it hasn't strengthened that much. It said it climbed sharply. It really didn't. I mean, we were talking about shorting it against the 358, 360 area, and it looks like we came up short around, I mean, we're from those levels, we're maybe up 70 pips or something. It's kind of silly. I mean, the way this headline goes. It got up as high as 341. And I said, you know, if you're interested in it, you can get it into around 360, which is just above that, the little zone area, and we'll take a look at that. So, you know, if you look at this, it looks like the yen must have gained like 100 or, you know, about 200 pips or something. It gained from the highs about 70 pips. So this headline's a little bit ridiculous right here. Now, the sterling, now that did take a whack. Because they're talking about potentially, you know, summer stimulus. So it says Governor Carney standing ready to cut interest rates in the summer as British economy undergoes post-traumatic stress has pushed the front-end gilts into the negative yielding territory, said Hans Redeker, head of currency strategist at Morgan Stanley. He added this suggested a weaker currency and a lower real rates of interest. The pound has slid almost 8% since Friday, the steepest daily decline in the post-73 floating exchange rate era after the result of Britain's EU referendum stunned markets. Those losses continued in Monday with sterling shedding another 3% and markets firmly in risk-off mode. But like I said, even before this talk, which actually gave the SPOOs an extra little boost, the SPOOs had already recovered just ridiculously awesome. I mean, the SPOOs have already recovered to the tune of well over 100 handles, like to the tune of almost 110 handles off the low. And we talked about that earlier in the week, and I was even surprised, you know, how quickly that we came back and how hard that we came back. So, like I said, the people that were looking for 1920, 1940, they're as quiet as a church mouse. I told you that idiot Rubini doesn't know anything. And the rest of these other naysayers. He makes one call right and everybody thinks that, you know, he walks on water. The guy's been wrong for so many years, it's not even funny. Every time he opens his pie hole, you can basically just fade him and take the other side. So coming in today into the U.S., we have PMI, market PMI finals. That's not going to move anything. Construction spending at 10 a.m. Eastern. We do have ISM manufacturing PMI. And Reuters polls at 5140, so a little bit better than the previous. They'll probably keep an eye on this employment data, as well as prices paid. Also, new orders index will be a little bit key. And that's about it, other than domestic car sales, which probably still be strong anyway. In China's Caxton PMI that came in negative territory again. I don't know how many months it is. So they're expecting more stimulus. Factory activity stalls in June. So you're getting this whole, that's one of the things that gold got a little bit of an extra boost on, is everybody's thinking about stimulus again. Growth in China's manufacturing sector stalled in June. An official survey showed on Friday, that's the Caixin or Caxon, however you want to say it, add to expectations that Beijing will have to roll out more stimulus soon to boost the sluggish economy. While output hit a 12-month high, nearly all measures showed signs of weakening, suggesting a spring bounce in activity is fizzling. Export orders and inventories fell, and factories shed workers at a faster rate. Similar studies showed activity in China's services sector picked up in June, which, if sustainable, would indicate progress in the government's bid to rebalance the economy. The official Purchasing Managers Index eased to 50.0 in June from 50.1 in May, and right at the 50-point mark, this separates growth from a contraction on a monthly basis. But the Caxon, as I mentioned, that was at 47.8 or 47.6. Both the official and private factor surveys showed companies shed jobs to a faster pace in June, which could weigh on consumer confidence and spending in the coming months. Cost cutting was cited in the Caxon survey, but job losses also could be rising as the government has pledged to broad capacity cuts across a range of industries. Both surveys showed further strains on smaller companies, a sign that the government will have to continue to lean more on the big states firms to generate growth, even as analysts warn of the risk of relying too much and too long on debt-fueled stimulus. The Brexit vote has led at least two investment banks to lower their forecast for China's 2016 growth. Nomura trimmed its forecast to 6% from 6.2%, and Bank of America Merrill Lynch cut its 6.4 to 6.4 from 6.6%. So for now, we can get a little bit of a volatility that bounces around. Matt says, who's Rubini? And then he says, LOL. That's a semi sort of inside joke from a couple of days ago. For some of y'all that may not have been on the webinar. So we're going to move into the charts. We, like I said, usually in the European crossover, we'll spend about the first 10 minutes or so, maybe 8 minutes, covering some news. If there's any economic reports coming into the U.S. session, what happened as far as economic reports in the European session that may have moved things around. As I said, in light of all the volatility that's happened, the economic reports aren't taking as much of a, weigh in so much on prices per se. Amanda says, Paulie, good morning. Thank God it's Friday to all. Great, Amanda. Nick says, hi, Paulie, did you load short Eurodollar again? Well, someone asked me about that in one of the chat rooms this morning, and they go, are you shorting Euro here, or have you been shorting? Like, why would it be, I didn't say it that way, but why would it be shorting Euro when I said that the outlook was 10.20? It got to the 10.20. Now we're right back here again. I don't see, like I was telling y'all, there's no reason to do anything, and we're going to look at the charts. Technically, it really opens the door for higher, although doesn't mean we'll go necessarily higher, but it opens the door, and I'm not going to push anything going into a 3-day weekend. And we'll go and we'll look as to why, because now from a technical standpoint, we were looking for 10.20. I didn't think we'd get there. We were looking for the 10.20s. I didn't think we'd get there yesterday. I mean, I was looking for 10.20 like Wednesday of next week or so, maybe Tuesday. And so let's go and move into the charts. So here's our line here. You remember that? We did this work here yesterday. And I'll open this up. Remember, there's my line right there. Right there. And you remember I was looking for a move into the 10.20s. I told you here, when we came into the webinar yesterday morning, I ended up even, getting short. But I didn't hang on for very long. Caught a little bit more, but like I said, I didn't know the wheels were going to fall off the caboose. Obviously, with what Carney said and everything, we caught a lot of volatility. But I said I was looking for about 130 lower, 125, 130 lower. Now, overall, I did mention for down the road, I am potentially looking for a move down here. But like Blake says, nothing goes in a one-way direction. And we did get a little bit overboard yesterday. I mean, when you see a move like this, that was amazing. But this is where I was looking for. I said in the 1020s. And you're going to look here. Boom. 1024. I mean, I don't know how more on you could have been than that. Although we got the catalyst with Carnegie saying his spiel. But that's what we were looking for. And I even said, I go, you know, I thought I was doing pretty good jumping out and grabbing a fast 25 pips. You know, I got short. I just think just right before the webinar started, and I don't know how long I was in that trade, maybe like 40 minutes or something like that. I don't remember. But, you know, quickly caught 25 pips. But then we ended up going lower, and I was even talking about it. I said, you know, there might be some of y'all that are saying, hey, look, I don't care. I'm not getting out. I'm holding for a longer haul. And for those people that did do that, hey, congratulations, man, you really did well because we really pushed lower. I mean, we really did. And that was my target, the 1020s. I had drawn this line up, but I said in the 1020s. And we got that 1020s, and I said from here, I'm looking for about, I think I said 135 pip move lower. And, you know, you can't get any closer than that, let me tell you, folks. So, but here's the key thing. This is a 2-hour chart, and look at that hammer. That's a pretty nice looking hammer. So you get a nice rally and you come back to test it. And where you like to see these, the market come back is, you see right here, we got this level here, right there. This is where you look if you're trying to get back long, is right there. See how we came just right there and popped right back up. You'll see the market come back. So if anybody, let's say, it jumped out and they were looking to get back longer, that was a good area just to step in. It's just right here where the body is, right in this little area here. You let the market come back. It could have come back lower, and you could have looked at this 1066, but this is where we got the body right here, sort of lean on this right here. Let's take this on. But here's the issue. Now that we've got this, got a very nice hammer bottom, it opens the door for a move back up here. And here's that area that I've been talking about, okay? So, doesn't mean that we can't run out of gas here, but you know, we've got a 3-day weekend, and then we went into month end and semi-annual. So I'm actually a little bit surprised that we were able to jump all the way back in here. So although I'm going to still remain bearish the euro, it doesn't mean I'm going to step in today and hold this damn thing, you know, 3 days. Now, it's not 4th of July everywhere else. I'm saying 4th of July, I saw someone make a pretty good joke. They said something about, well, you know, we have 4th of July in the UK too. I mean, they meant the calendar date. But the markets will be open, but it's going to be a little bit thinner with the US closed. And one of the guys, S&P trader, E-mini trader, made a good point. He said, you know, the big boys are already off to the Hamptons. We've got the JV team on the field. You know, he said, you know, let's, you know, get her done, you know, hit what you're going to hit, and then get out the door. And so you can get a little bit of dancing around here, but I'm not expecting anything too much. But my thinking is that you've got this. There's no reason to jump in my opinion, and necessarily jump in the short. Now, you might catch yourself 15 or 20 pips, maybe. But the way this is technically set up, it kind of opens the door for them to be. Here's what I think it could happen. We can start the week potentially with a quick pop, which can fade, as I think we're still going to, like I said, expect a stronger NFP. But anybody that was short, they got rewarded. So those people who've taken off the shorts, or a good chunk of them. And I'm talking about real ultra short-term traders. So the way the market is now, if there's anybody that's short from here, let's say 1050, 1070, they're stuck on the wrong side of the market for now. I think they'll eventually get rewarded, but we can put some of those people's feet to the fire, and we can punch it a little bit higher today. So, no, I'm not, you know, like, if we were to get a rally today, you know, like, let's say above 1151, yeah, I'll start looking at it on the short side at that point. I'm not interested in shorting it here. I'm not, because I know that there is the opportunity for them to squeeze a little bit higher because we're going into that 3-day weekend and we've had a very nice turnaround from this area. You got a very nice little hammer bottom. And people had the opportunity to get out of those shorts down there. Like, let's say you said, you know what, that makes sense to me. I think I'll be looking for 1020 myself too. So when it got down there, you probably, got out of your shorts, or a good chunk of them, if you didn't get out of all of them. So you're like, well, let me see how far it's going to go before I get short. And some of those people might say, you know what, there's no rush. I'll wait till next week to go in and get short. So you're missing some of that fuel that could move us lower. Like yesterday when I got short in the spot at 1046, here, I wasn't even worried. Like I told you, I said, hey, you know what? If they take it up here into this area, we'll get this. I go, if they take it into this area, I'll short some more. Because the most I think they could have done damage-wise is this 1216. And I kind of doubt that, but I mean, that's the most I could see the market going up. Doesn't mean it could eventually appear, but I'm saying is this is the most I would expect. So I'd have gone and shorted some more. Because I thought, as I told you, the narrative was the whole thing with the NFP, and we've had a pretty good run. Look how low we were. And I was telling y'all, if you look at this, I go, you're basically almost 250 pips off the floor. And the market has been going pretty much in one direction. So I thought, I'm happy shorted here because I'll get my money back. I mean, that's how I felt. Even on a very, very ultra short-term basis, I'll get my money back. So, because I thought, even if they take a move here, now that's yesterday, just to give you what my thoughts were, they took a move here. When you add this and this, that would at least augur for a move back to around here. So, I was like, I can sell some more here, and I'm already short here. I can get out here, and I'll be fine. I've only made, a little bit on this trade, but I've made more here, and I'll see what happens. So, but right now, we're in a different mode here. Because now, anybody that was short had the opportunity to cover right in here. So now, potentially, we can go in and work up to here. So, it is a Friday. You're going into a 3-day weekend. Maybe they can squeeze them up a little bit higher. As we're coming to the New York session, they might even get up to maybe, like, here's what's going to happen. I'm not saying here's definitively going to happen, but let's say in the New York session we get whatever economic report we got. I told y'all we got roll back in here. Just to give you an idea of the way I would look at it. And we'll jump back in there. So we jump back, so we're all on the same page. Anybody that's coming in, straggling in a little bit late. So if we come in, and let's say that we come in and this PMI final comes in a little bit weaker, and we come in more importantly into the 10 a.m. Eastern, and this ISM manufacturing, let's say it comes in at 50.2 or something like that. And that might allow, and let's say the employment index comes in a week or two. Let's say it came in at 48.2 or something like that. My point is that it puts the dollar on the offer, okay? And we're already coming into a 3-day weekend. It's a little bit thinner. So let's roll back into the charts again. So that could open up the door for a nice little stop run. They get some people. You got some weak hands that might have shorted below 11, and on the way up, and they shorted at 1170, 1190. Maybe they added some more, and I mean 1070, 1090 added some more at 1107, and these people are really catching some heat. So we just push a little bit higher because there's, hey, we're doing a 3-day weekend, just taking the opposite direction. And so we gun the stops. We probably have potential, and I'm just telling you how this could play out. So we just take out the stops of 1151. Now, if we do that, and we're coming in here, yeah, I'm going to get short. I'll get short. Because I think I'm getting a bargain at that point. Yeah, they're just holding people hostage at that point. They're going to go in and squeeze them and make them pay. Could we pop up even higher? Maybe, but I mean, I'm happy getting short right there. Let them blow some stops. And you can see here the market's playing that way. It's these games that you see here on a Friday. I've said it time and time again. Some of y'all may not know because, y'all may not follow me on the European crossover. It might be a little bit too early for you, But I'm just saying is we see these games continuously played. Those of us on the European crossover know about that. We always talk about, hey, this is the direction they're probably going to go today. And, quite often happens a lot. And you're seeing that right now. They're pushing it. I'm telling you how the game is played. Okay, I trade completely different than everybody. I've got my own style of trading, and those that follow me on the crossover, they know I'm ultra short term. Here, I was shorting here on the spot at 1046. I was looking for lower. I said, I'm not worried. I'm looking for about 135 lower. Look what we fell, and there was my area right there. And I was saying to move to the 1020s, and we got as low as 1024. If that's, now obviously the catalyst was Carney, because I really didn't think we were going to get to here until maybe like Wednesday. But we fell quickly, and I grabbed a quick 25 right here while we were on the air. So, as I told you, as we came down here, the key thing is we hit this area. So, anyone who was short and held for longer, they've been rewarded. And they've taken those shorts off the table. And I don't mean the big hands, because we were talking about that. They might be looking for 106, 102. And I think ultimately they're going to be proven right. But once again, that's over the next few months. So on the short term, the shorts have already taken their money and ran. So on the way back up, there might be some people that are really pissed off that they missed this opportunity. They're like, oh, I can't believe this. I can't believe this. I should have got short. So they shorted in here. And they shorted in here. And they shorted in here. And they're singing the frickin' blues. They're like, this is stupid. How can the euro be up here? This is ridiculous. The higher the euro goes, the more these people are going to be forced out. And they're thinking, I don't want to be short. Oh my God, it's a 3-day weekend. And they start to see everything negatively. It's thin. What happens if they gap up? What if by the time Tuesday comes, we're already at 111.80? Oh my goodness. Well, you see what I'm saying? This is the games and how the markets is. Like I said, the best way to do trading, I said, is if you look at it from a gaming perspective, and I don't mean gaming like Las Vegas. I can barely even play poker. I don't even play poker for so many years. I mean the gaming like you're treating it like a game, like whether you're paying chess or backgammon and you're using strategy, heck, even if you're playing checkers. But so they got these people on the wrong side of the market, and they're ticked off because they're thinking, oh my God, I can't believe, look, I mean, if I got short, I can't believe this. Look how far I fell. You know what, I'm shorting on the way up. They're not fooling me. But you see, it's a 2-hour bar, and that's a hammer. So look how they went up here too. They came back to eventually test, but they came right there where the body was. And they reassert themselves. And these people are adding all the way up. So the activity's thinner, so we can easily get a squeeze in the New York session. Let's say if we get a little bit of bad news, as I showed you on the report, maybe get a little bit of bad news on the manufacturing PMI, whatever. We can squeeze them. And if we squeeze them, they might as well they might as well hit the stops here. I mean, I would wait for them to gun the stops here. Could we maybe fail before we got here or stop dead in its tracks? Okay, whatever. If it does, it does. I'm not going to get short ahead of a 3-day week. I'm just not going to. But if we blow the stops, yeah, I'll be interested in taking it short. And I'll be interested in probably taking it short around the 1172-ish area. Because I'm thinking, like I said, my favorite saying is, it's all relative. It's all relative. So let's go on and get rid of these. When I was getting short here, I said, look, we're almost 250, maybe 220 pips off the lows. It's all relative. So I was like, I'm not worried about it. Like I was telling you, I go, if it wants to rally some more, I'll short some more in here. Now, Blake, his is a more longer term hold, not me. I'm just in and out, you know. So I was like, okay, I'll sell another 25 higher. I'll sell some more. And then when it gave me 25 pips, within 40 minutes or 45 minutes, I took the money off the table. But we talked about that, you know, and we started to move a little bit lower again. And I was like, wow. Anybody that said, well, I joined you on the short, but you're crazy. I'm not getting out. I'm going to hold for that move that you're talking about to 1020. Well, those people got rewarded later in that day when Carney, you know, got on his thing. Hey, more power to you. Congratulations. You know what I mean? But those people took their profits. And so they're going to get short, but they're waiting to get short again. Well, if they're experienced traders, they know as you come into a Friday, and on top of that, to boot, it's a 3-day weekend, and the market just paid the people that got short. They're not in any rush to get short again. That's why I said earlier this morning, I had someone ask me in the chat room, are you short now? Why am I going to be short? Did you see the fall back here? It hit our target. There's no need for me. I mean, to me, it's almost second nature because I'm not going to get short going into a Friday, especially after we've had a hammer bottom on a good sell-off and a fast sell-off. No, I'm going to wait. Doesn't mean I won't get short. At this point, no, I'm not getting short. I'm not. But I will get short if we rally in the New York session. We might use the as I told you, the ISM manufacturing. If it comes a little bit weaker, we're going to open the door, and it won't be that hard to go through the door to gun the stops. And the people that shorted here and here and here, it's their stops are going to be hit. And it's not just that, it's just that it's easier just to go and hit it. If you're going to play a percentage basis, if you're saying, I don't care, I'm going to trade, well, then get long. And then you have a higher probability of them making a move. You can even exit your longs just right before here, because in case it runs out of gas. Or a good portion of them, and see if it guns the stops. I'll get short if and when they gun the stops. I'll get short. And maybe they get stupid and really kind of rally. But I'll be, once again, it's all relative. I'll be saying, if I'm shorted here at 72, I'm saying like, hey, dude, it's 150 pips off the bottom in less than 24 hours. I'll take the other side of that candy bar. And we have the NFP. And I think that we're going to see a bounce back number in the NFP. The NFP could, I wouldn't say it's going to fall flat on its face, but it could be a disappointment. But, you know, you could say a week from today, Man, you were wrong on the NFP. It was only a gain of 70,000. Yeah, but you missed the point. I'm playing the probability that that it will be a bounce back number. So if I'm shorting it here, let's say that we rally. We're on our highs. We rally and we gun the stops, and I get short at 1172. And let's say it even gets up here at 1192. I'm not thinking it get that high, but let's just say, okay? So maybe I add a little bit more, whatever. So then going into Friday, sometime next week by Wednesday or whatever, the market's at 11. I cash out. Or 1092, I cash out. So then the market works lower. Here comes NFP Friday, and the number's only 68,000. And the euro dollar zooms up here, and it's at 1216. And some people will say, you were wrong. Who cares? I played it for what the outlook was, and I already made my money. When it gets to the actual event, I don't care. Just like I'm not going to trade the actual event going into the event. Like I'm not going to, if the market was sitting here, I'm not going to say, oh, you know what, I think we're going to have a great NFP. When's the NFP release? Oh, in about another 30 minutes. I'm shorting it right now. No. I'll play it in going into the NFP. Doesn't mean I'm gonna hold it all the way into at 7:29, or I should say 8:29 Eastern time on Friday. No, I'll play it just like I played the NFP yesterday, selling it at 1046. I told you why. What was the reasoning? So we were a week and a day before the NFP, and I was already trading the NFP in the expectations game. That's why I was happy to sell it right there. So if I short it as a gun that stops, I'm going to be playing the NFP, the expectations of what I believe was going to come out. Whether or not the number comes out good or not is irrelevant. I'm going to be playing it going into that. So hopefully that, I mean, the reason I'm stressing, usually on Fridays on the European crossover, we talk more about strategy, because sometimes, you know, the week's already over. There may not be any real good trades. So we talk about strategy and how we're going to go into trades. We look at the week coming ahead, which we've done just right now, how we think it's going to play out. And so that gives you a good mindset on how you want to trade it. Because maybe the market goes here, up here, and you're like, okay, well, we weren't expecting that. But if you have the mindset, you're saying, you know what, I think it's going to be on any rallies, I think it's going to be a fade because they're expecting a good bounce back NFP number. That's the way you want to look at it. At least that's the way, or the strategies that we use as we're obviously we look at technicals and we look at the structure of the market, okay? But we also get an idea from a strategy standpoint. How we want to play. It's just like we all get together around the table, and a round table, and we say, hey, look, what are you looking at? And you go, well, I think this is going to have this. Okay. You may not be talking the outward prices, but you're kind of like saying, okay, this is how I think the flow of the game is going to go. So you're going to have your technicals to come in, you know, based on that flow. Doesn't mean the flow of that game is going to come out exactly right, and it could even be wrong. But you already have an expectation on how you expect the flow of that game to go. And then you can use your technicals. So the flow of the game is today, you know what? They had a real good sell-off yesterday. It came right into our target. So they've had a bounce back. Technically, it looks very nice with the hammer bottom. We're coming into it's Friday. We're coming into a 3-day weekend. It's a recipe for a stop run to the upside. Wow. Ron says, great call. I got in euro at 42 with you, and I got, you see, he banked it. Got in with you euro at 42 with you and got out at 1045. 95 pips. Thanks. Well, you know what, Ron? I was going to say, screw you. You made more than I did. You did better than me. But that's great. I mean, that's fantastic. And Ron is exactly what I was talking about. You know, where I caught again some more. But I'm saying where I jumped out, I was telling y'all yesterday when it was still continuing to sell off, I go, there's going to be some people that probably say, you know what? I got in with you, but you're crazy. I'm not getting out with a lousy 25 pips. I'm going to hold for that target. And that's exactly what he did. He didn't even wait till the entire target. but he made a nice chunk of change, 95 pips. So that's what I'm saying is, but my trading, like I said, I told you before, I mean, I know obviously the Cole Carney thing made a whole big deal, because if not, this would have been the max of the trade, okay? But the whole thing with the Carney, that really opened the door lower. But like I told you before, I'll never be the guy that catches 100. I mean, not 100. I mean, I'll never be the guy that catches 200 pips, 300 pips. That's not my game. And like I said, with Euro, that's what I said. You get a lot of back and forth action with the Euro. Sometimes you're going to get moves where it just keeps on going lower, but you get that back and forth action, and that's what I like to go and trade that back and forth action. But I think there's a good possibility that we can squeeze them. I mean, let's take a look at the outlook is favorable for that. So, you look at the weather, you look at the weather on TV, and the guy goes, yeah, it looks favorable that we're going to get rain. It doesn't mean we're going to get rain, but with all the cloud cover, overcast, and moisture in the air, there's a good chance. So it's the same thing that we're talking here. Going, after a sell-off, a very nice and a good hard sell-off, goes to where our target was. Technically, we get a hammer bottom. We're on Friday. We're going into a 3-day weekend. Yeah, it has a recipe for a short squeeze. So that's where you want to play it. And I told you, if you want to play it long, you can play it long. And then I would do is take off most, if not all of it, on the run up here. And now you might leave a little bit for a stop squeeze. But me, I'm going to take the other side. I'm going to wait and see if we get the stop run. Because going into a 3-day weekend, I really don't want to hold it. I don't like to hold over the weekend. I mean, if I do, I will. I never hold crude over the weekend. There's no way in heck. Who the heck knows what's going to happen, and I don't need to be blown out of the water. But the Euro, I mean, within reason, yeah, there's some times that I will hold over the weekend. Well, I'll hold this. If we get the stop run, I'll go on and hold. I'm not going to load the boat, but I'll go and take some. Who knows? Maybe before the end of the session, I could be back up 30 pips, and I'll take the 30 pips and and go home and start all over. But if it goes up here and stays up here, that's fine, no problem. Because I think that next week, as we go back towards the end of P, we'll see the market come back in. But for right now, there's not a lot of participants. So, like I said yesterday, while the cat's away, the mice will play. And that's exactly what we're setting ourselves up to do. So we spent a lot of time on the Euro, but I thought it was interesting. I thought it was important that we focus on how that's trying to play out. We're going to take a look at the cable, and we know how this thing's played out. And we'll move this over here, there. It came right into our zone. We talked about that. We were stalking this trade since Tuesday, and we talked about how it got to the 38%. And I said, we really want to wait till it gets into this zone here. I think it's going to make it into this zone. It might even make it halfway into the zone, mentioned the 35.50. It stopped just a hair below that. And we quickly lost almost 175 pips. We rallied up, and if you look here, this was very nice right here. Because you've got a hanging man right here, and right here at the zone. And I had already drawn these zones or the zone levels before we even got here. I just went with the touches. I said, you know what, that makes the most sense. Is that the way they want to go? And then to look at right here. Once again, the most touches. Because you see, it's only 2 touches, but you see here and here. So I said, well, then that's the upper part of the zone. I don't trade cable, but like I said, you had a very nice you actually had 2 back-to-back hanging men. That opened the door. Obviously, Carney's thing really, opened the floodgates. But we'll have to see how that plays out. I don't see anything worth doing here on the cable at this point. Nothing. So let's take a look at the dollar yen. We talked about this. I said, I really don't see anything, but we said yesterday, if you want to, you can sell it short it above 360, or at 360, I said, because that would have taken us right just a hair above this 358. We'll move this here. And we came in, we almost made it, I think it was what the high was, what, 341, I think. Yeah, 341. And we can say we could start shortening it to 360. You know, that's the earliest I would have done it. Obviously, it didn't get there, but for those that were looking for it, you were able to catch some money. But um, yeah, we talked about this. Is that it's here's the spoos at freaking 2090, 88 and a half. Look at the zone. I mean, holy smokes. You know what I mean? I would have thought, preferably, I would have thought, okay, it's a pretty good short. If it had come into, I could say, like about right here. Let's take a look. Like right there, which would have been kind of about 390, but we'll take a look. Yeah, 392. We got another one right here with this touch, so I would have gone with right there, which is probably 395, 394. There, I would have said, okay, that's good right there. But if you were hell bent to short it, 360 wasn't bad. Well, heck, we only made it to 341. The only thing I would say was that and I wouldn't have hung my hat on that. But if you look here, well, I was going to say, from a bigger perspective, it looks like it's a spinning top. You see, a little bit closer perspective. I mean, I guess it's still kind of, well, I don't know if the wick's a little bit longer, but it's almost like a spinning top. And then we do, if you look at this, we do rally above it. Then we, let's see, the open here. They opened weaker than this open, but it was only because unless you're trading yen all day long, I can't say that it would have been an easy thing to catch, other than you getting short and saying, you know what, I'm happy getting short because I think we're going to go lower. I wouldn't have said that there was anything. Like I said, I wouldn't have touched it no sooner before 360, and we ran out of gas at 341. But it is what it is. So Nick says, can you please take a look at the Kiwi for a possible short, currently at the 71.80? Yeah, sure, no problem. Hold on. Holy smokes, I'm rallying higher. Well, you know what? That's because of the spoon. So let's see where we're at. Let's move this over here. So we can do a little bit of serious work on this thing. Well, we're into the pink zone right here. So they're pushing a little bit higher. Once again, we're into a 3-day weekend. So maybe they can push a little bit higher, but I like this area right in here. You see how you got, like I'll show you right here. Show you what I'm looking at. See this low and then this high. So we'll draw the line here. I like that area right there. Just 71.95. So That's pretty solid, that 71.95. Let's go and mark that off. I mean, it's 100 pips away, but, you know, if they want to add a little bit more juice to this boost, I don't think it's out of the realm of possibility we can make it up there. Because, I mean, we're here at this zone. So you can see here I had the zone marked off. So they get a little bit of pushback, but I would not be surprised if they can spook it up here. So you may want to, I think if you get 71.95, that's going to be freaking awesome. I really do. You can see here the touch even goes all the way back here. Look at that. Rallied here, and then come back for support here. Well, it's pretty stout. Moving to a 30-minute. That's pretty key. It really is. Let's take a look at it from a fib. Don't forget this high and low was done on the Brexit evening. Well, this is way above the market. That's 72.29 up in here. So we do have the 61% here. Another thing we can look at is the reactionary high. Which 72.05 would be the 127% extension of the reactionary high. So we'll draw this out. Should be $72.06. $72.06 is 127% extension. 69.71 to 71.58. 71.56 actually. I think there's I think it's open to move up there because they may just squeeze people. I mean, if you want to think the same way the doggone spruce squeeze a lot of people. So you may want to exercise a little bit of patience and see if they can move up here. If we get a move to the 71.95, you can say, okay, I'll take it on right there, 71.90, 71.88. And they want to punch a little bit higher, fine. 72.29 is the 78%. I think we have a tough time getting there, but anything's a possibility. Here's 72.26 right here. See that? So let's mark this off. That's pretty solid right there. And 72.29 is the 78% of this move. So I think you could come in here around 71.95 and say, okay, you know, they can run a little bit higher against me. But if you look what the spruce have been doing, the spruce are at 20.90 right now. You might get these to squeeze up a little bit higher, and then it would fall back. But it's been a pretty stout run. Yeah, you were saying it's 71.85 now. Yeah, I know, but I'm saying is I wouldn't be. Oh, what the heck? Yeah, I don't know. I don't know why I'm thinking it's like 72 something. You're right. We're almost there. I don't know why I'm thinking this is like 100 higher because these moves have been so huge. Yeah, we're almost there. Yeah, you're right. Yeah, I didn't even realize. So I would go in and step in at 71.95. See if things squeezes here. Yeah, you're right. It's good. I don't know why I was thinking this is like these moves have been so huge. I was thinking this is 100 higher. Yeah, we're already here at 71.81, or you were saying 85. Yeah, not a bad area. This whole zone here, 71.83, 72.09. You see that, and 72.06 is 127%, and 72.29. We'll mark it off again. Make sure we have it right. I don't know why I was thinking that's like 100 high. I don't know why the heck I was thinking that. Yeah, 72.28. I think it looks pretty good. I think it's pretty decent, this 71.95 right there. And you've got this the zone here. Mark this here. There we are. I think this. I like the 71.95. Maybe they can goose it. I mean, if you want to get short here, you could. Pedro says, "Can you also talk about the spoos?" We will when we get back. It's already time. We got. I mean, it's time to go on break. And as I told you, this Blake will be back on Tuesday. I don't know why I kept saying Monday. Monday obviously is 4th of July, but he'll be back. And I'll be back to my regular session, which is a European crossover, which is from which comes on at 6 a.m. Eastern time for 1 hour. But Blake will be back on. During this time, I only take one break throughout the entire 2-hour session. So that break lasts for about 12 minutes. Because like I said, I get pretty worn out as I talk so much and talk so fast. But this is a pretty good area. I like a run to the 71.95. Maybe they can goose it just a little bit above the 72. I mean, obviously, if you're happy with it overall, it's not bad. But I'll tell you what, we got the spoos at 20.91 a quarter. I'd let them goose them a little bit. You know what? If it's me, I'd let them see if they can gun to stop the 72. That's what I like to do. I haven't traded Kiwi in like forever, but they're really squeezing it. I mean, if you think about it, what the heck, man? It has been a big run. I mean, it's a pretty good size run, but I'd like to see it get above 72. We're not that far away. If spoos can punch them up a little bit higher, maybe get a nice little squeeze up here. 71.95 is not bad. If it's me, I want to short it at the top of the zone here. 72. I would say 72.07. I'll take the 72.07. If it goes 20 pips against me, no big deal. It's at the 78%. But I want to get a little bit more juice because spoos are at 20.91. They're actually 20.90.5. And 20.92.5 is a very key level. It is, but maybe we can squeeze them a little bit higher. But as I said before, I think might be able to get a little bit better price on that. So it's time to go on break. Blake will be back next week. Like I said, it's about a 10-12 minute break because I only take one break out of an entire 2-hour run. And so we'll catch y'all in just a little bit. And thanks for joining us here on the Morning Edge. And Blake will be back on Tuesday for the next one.